Welcome back, traders, to a new video. Today I want to be talking about how to trade options with the stock Moderna. So with today's time with COVID-19 and everybody getting vaccinated, and now they announced the third shot, the booster shot, all of these stocks that are concerning the vaccines are all pumping, and one is pumping very high in specific, and that is Moderna. Moderna is just flying. The past few weeks, it's just been flying, and knowing how to play it right on the option side is very important. This is a question I got very often is, how do I play it? We're having this issue. So I'll be talking all about that in today's video. Now, a quick reminder before we get started, my new website is finally out. So if you're interested in my courses, you can go to my website, mosestrades.com, or link will be in the description, and you can check out my two courses. Right now I have two courses for sale. You could, go to my website if you're interested. You could see what's included in each one. And then, if you want to take further actions, you could purchase it and then watch the course and learn how to trade options. But let's get right into the video. I'm in the chat room called awesomecallstrading.com. And pretty much here, also if you're interested, the link will be in the description. But pretty much here, we get these notes before the market opens. So these were our notes for today. And as we can see, MRNA is in play. It's gapping up 10 points. And then, AJ tells us exactly how to play it. And this is all written before market. So once market opens, you could have your lines up. And then, you could play the stock how it says. But now, even if you want to play it on the option side, so MRNA, for example, there's a lot of things that go into it on the option side. And that's what we're going to be going into today. And the reason why it's so important is because MRNA has been in play for a couple weeks now, and it's been on AJ's notes, Awesome Calls Trading notes, for a while, for a few weeks. So I want to, and I think you'll still be in play for a few more weeks. So that's why I want to make sure that you know how to play it right on the option side. So now if we look at the MRNA stock, today it's been, today went from 387 all the way to 411. So this is like over a 20, around a 20-point move, over a 20-point move. It's like almost 25 points. But if we go to a 30-day, we can see the stock is moving. Here it went from 413 all the way to almost 500. This was like, how many points was this? This was almost 90 points, huge. And then, it went down and then went down again. So you could be playing all of these moves here. So now, knowing that you could be playing all these moves, again, you have to know how to play options with them. So now let's look at the option chain and let's see how to actually play the stock. So as I always tell you, is you have to make sure that the spreads are super tight, that the volume is high, and open interest is high. So here we can actually see that the spreads aren't too bad. Let's say we're buying these contracts. The spreads here are only $25, which is, not too bad. So, you may be asking, what's the issue? Well, it's not always like this when the market opens. It's almost never like this when the market opens. Right now it's 2 p.m., so the market has been open for a couple hours, so that's why the spreads look so tight. But when the market opens, right at the open, even if you wait 5 minutes, the spreads aren't always going to be this nice. So what I like to do is I like to wait and, wait for the spreads to get a little bit tighter. Now, another issue is for MRNA, when the stock is moving, since the stock moves so many points, in a small amount of time, once the stock is moving, the spreads are going to be very, very far apart. Now, I actually recorded a video of how the spreads are. This isn't at the very open. It's around 20 to 30 minutes after the open. But still, we can see how much the spreads go out. Now, before we get into the recording, something that I do want to mention is on the charts that you're about to see is I have these two custom columns. Now, what these two columns are is, I'm going to just explain it so you don't get confused, is this column right here, which is named spreads, SPR, which stands for spreads percentage. Pretty much this is what percent the spreads are compared to the bid. So pretty much when you're trying to choose a strike price, you ideally want to choose the strike price that has the lowest percentage, because that means that the spreads are the tightest. Now, if you're interested in this column, it's a custom script. There will be a file link in the description which gives you an instruction on how to install this. And also a little bit later today, I'll be releasing a video how to put this in and how to use it. Now, the second column right here, which says REC question mark, this stands for recommended question mark. And what that means is if I would recommend this strike price, pretty much the ones that say yes, that means that I will take it. Now, this script is only given to the students that have taken my extended options course. So if you have taken that course, you could check in your, where you see all the lessons, and there should be a video where I explain how this script works and how to install it. So if you have my extended options course, go to your course and you could easily install this. And then this spreads is pretty much for anyone. So if you want to install the spread script on Thinkorswim, link will be in the description. Now let's get into the video. So I recorded this. I can see the time on top. It's currently 9:47. There you go. Now you can see it. So it's 9:47 a.m. So market's been open for around 17 minutes. So let's see how the spreads move. So the stock is either running or it's going down. So the stock is moving because again it's the morning. So the stock in pre-market was gapping up 10 points, so it was in play. So right here, it's currently paused, but we can see that the spreads aren't too bad. I mean, if you're taking these $600 contracts, the 420 strike price, the spreads are only $20, which is 3%, which is pretty good. I mean, I see there's this 1%, but these are expensive, $1,500. So let's say we're playing in around this price range. These are not bad. So let me click play and we'll see how the spreads changes. Let's look at the how the spreads changes, but we're going to be looking at this percentages because the percentages are going to help us a lot. So I did fast forward a little bit. I fast forwarded like 3 minutes. So let's look at the 420 strike price. So here before I believe the spreads were around 4%. Now they're 5.5%. So 5% is not too bad. But when we click play, let's watch what happens. So because the stock is moving so much, the bid and the ask, they widen up a lot, which means that the spreads do get wider. So if we look at this 420 strike price, it went from 5% all the way to 9%. Now this is $50 spreads. It's a lot. Because if you're doing market buy, you're getting filled at the ask, which is 600, and then if you want to sell it right away, you're selling it for the bid, which is 550. So if you buy and sell within the same second, you're automatically losing $50, which is a bit, a lot of money. If you have 10 contracts, which is around $5,000 buying power, $5,500 buying power, you're losing $500 instantly. So that's why you have to make sure you're looking at the spreads. So what I recommend is install the spreads. Install the spread percentage and make sure that when you're buying, if you're doing market buy and market sell, that you're buying and selling when the spreads are tight. Because look, I mean, 8%, that's a lot. And then we continue to press play and then look at this. These went to red. And now when it's red, that means it's over 10%, which is something you do not want to do. I mean, look, this is $90 spreads. Big no-no. This is $75 spreads. Also a big no-no. So that's why you got to make sure the spreads are tight when you're market buying and market selling on any stock, but specifically MRNA, because since the stock moves so much, the bid and the ask go so far apart where you can really get bad fills if you're doing market orders. So like for example, if you're buying the 410 right now, you're getting filled at 895. And if you want to sell it right away, like the next second, you're going to sell it for $805. So you're automatically losing $90 with one contract. If you have 10 contracts, that's $900 you're losing in a second. That's why you have to make sure the spreads are tight. Now, press play, we see that, this went from 11 back to 9%. Now, that was 2% a few seconds ago. Now it's 4%. So now it's 3%. So when let's say we want to get the 420 strike price, you want to make sure these spreads are pretty low. So 3% is pretty low, but look at that. It automatically jumped to almost 7%. Big difference. You're going to get very bad fills with this. And, if we keep on playing, it's just going to be jumping up and down because the stock was either moving up and down. So, the bid and the ask get very far apart, meaning the spreads do get wide. So when you enter here, this is a perfect entry. It would be 420 strike price is around 2.5% spreads. So that's fine. I'd enter this that looks, but now it jumped all the way to 6.8. So when you're buying, you got to make sure they're tight. So pretty much, if let's say you want to do the 420, when you click, you want to buy market order, double check that the spreads are tight because look at this. Now it's 1%. So 1% is even better, 1.6%. If you enter here, you're going to get beautiful fills. But if you enter in with the 415, you're just going to get destroyed with the spreads. So this video goes on for like 15 minutes. I'm not going to go through it all because I think you get it. Pretty much whenever you're entering, make sure the spreads are tight because they will change very often. If you look at the stock and you like right now, let's say you look at the strike prices and you're like, everything in my price range has not the best spreads. Let's say your price range is around 400 to $300 to $400. So these two, let's say, you see the spreads are 10 to 11%. You're like, okay, I don't want to trade it because the spreads are not tight. You have to wait a little bit. And now I'm talking about specifically on MRNA. They have to wait. There's other stocks that, if their spreads are 20%, they will probably stay 20% for the first few hours of the open. But the MRNA spreads do change a lot. I mean, look at this. This is 16%. So again, make sure they're tight if you're doing market buy and market sell. Now, another way to get around this is by doing limit buy and limit sell. If you do limit buy and limit sell, you're buying at a specific price, not higher, and then you're selling it for a specific price and not lower. So you're controlling the price you're buying and selling at. Now, the issue of this is usually when you want to enter in, you want to enter in the stock when it's, starting to break out. The issue of that is when you do a limit buy when it starts to break out, the stock is already running. So let's say you put a limit order at a certain price, the strike price may already surpass that price, and you may not get filled. And the issue then is that you're not filled, and then chasing might happen where you want to chase this, and then you keep on bumping up your limit orders, and then you're not getting filled, and you're keeping bumping up and bumping up and bumping up, and then you just miss the whole move. And even if you do enter, selling is another issue where, let's say you want to sell at this price, but then the stock went down a lot more, and then you just keep on missing it, and then again you're chasing and chasing, and every time you're chasing, you're just losing it and losing more and more money. So it does become an issue. That's why I do recommend everyone to do market buy and market sell, but for that you got to make sure that the spreads are tight. So this is it for this video. Hopefully it did help. Again, the spreads script, and it's kind of like a document and tells you exactly how to install this. It will be in the description below. And a little bit later today, I will be releasing a video on how to install this. I'll be showing it to you visually how to install it. So either A, if you're watching this and it's not out yet, then wait a little bit. And if you're watching this and it's already out, then link will be in the description box of the video, so you could click that video and see how to install these scripts. And the recommended scripts are only for my extended options course students. And yeah, if you're interested in my course, check out, link will be in the description. Also, my Twitter will be in the description box below. I post my option trades daily down there, so if you want to see what I play, how I played, check out my Twitter. I never miss a day, even if it's a loss, I'll even say it. So again, thank you so much for watching, and I will catch you on the next video. Have a good one, everyone.